This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This look ahead is for the week of September the 28th through October the 2nd. Charles Roplet, our senior market analyst, here with me once again to provide little detail in the week ahead. Actually, he goes
we can dig really deep into the minutia if you want to.
Actually, you go into enough detail here, more than we have time for. Let's start with the fact that we are getting closer to the official start of third quarter earnings season. Not quite there yet. So this week that we're talking about, September 28th to October 2nd, is going to give us another small sampling of some companies reporting, right?
Yeah, a very small group. We have 5 S&P 500 members reporting, and none of these are companies that are really going to move the markets. We're talking Constellation Brands, Darden Restaurants, Walgreens, Nike. Big companies, certainly important in their respective sectors. I don't want to downplay the significance of their reports, but in terms of moving the markets, nothing really on the calendar in terms of earnings that will move the markets. A whole lot of data on the economic side, but we're really waiting for the big storm of economic, well, I should say storm, the big flood, wave, whatever you want to use to describe it.
Tsunami of
data. We should probably come to something more, probably a little bit more positive than weather-related disasters. But certainly before we see that, really, most of the companies report, that won't occur till late October. So we're kind of in a little bit of a void. Early in October, obviously, we'll have some big companies coming out. Everybody looks to Alcoa for their numbers, official start. Usually we get General Electric later that week. We'll have some other very big companies, the mega large caps report in the first half of October. Then obviously once we start getting into the second half of October, we'll have weeks where we're having 600, 700, 800 companies reporting. So still several weeks away from seeing really the peak of earnings come out, but we are getting near it.
Now that we've established that. And speaking of large companies, couldn't help but notice that IPOs among large companies are enjoying a bit of a comeback. As a matter of fact, many companies using stock offerings to boost their balance sheet lately.
There are. We're actually seeing some IPOs. This was particularly a busy week for IPOs. It's a good sign for the markets to see that companies are able to come out and bring offerings to it. Even Twitter just got a big amount of inflow of cash coming in there. So there is money being spent. The public markets are opening up. And the reason why it's significant is not so much that companies are raising money, but the mere fact that we are getting IPO deals done because that market had been shut down.
Right.
Now, if you're a bearish person, you'll point out to the fact that that's more supply, meaning every time we bring a new company to market, there's that much more competition. Now, granted, we're not talking a large amount of competition just because we bring one additional company to the market, but understand when we're selling more debt, we're doing more secondary offerings, and now we're bringing more companies out to the markets, there's only a finite amount of investment dollars and it has to be allocated to all those stocks. So if you make the pie bigger, unless the pie itself rises in thickness, meaning the Dow and the S&P 500 continue to rise, the money is going to become spread thinner and thinner, and that could be a potential problem for the markets. Right off the bat, it's not a problem right now, and I actually do think it's a bullish sign that we are getting IPOs done and that we're actually getting secondary offerings done as well for existing companies.
We've also seen kind of an increase in companies that surprise to the upside. At least through second quarter anyway. Still kind of early to say that that's a continuing trend or building trend, but when investors see that after what we've been through with the financial crisis, what kind of impact do you think it has on their thinking? Are they lulling themselves into a false sense of security or not yet?
Well, I think it's going to be really difficult to say how third quarter earnings is going to shape up. Certainly on a year-over-year basis, the earnings are still going to be bad simply because so many companies are facing tough comparisons. But then when you start running into issue of surprises, it does look like we could see a lot of companies beat in terms of earnings simply because of cost-cutting measures. The question will be, what will revenues look like? And when you look at some of the companies that have had a negative reaction, as we record this on Friday, shares of Research in Motion, which makes the popular BlackBerry smartphones, they're getting knocked down pretty heavily. because their revenue guidance was a little bit weaker than expected. We saw FedEx and we saw Oracle actually drop a little bit because their revenues were a little bit weaker than expected. So we're getting closer to the point where investors are going to start asking, okay, we understand that you're facing tough comparisons, but what does the future look like? And that's a little bit harder to predict. We can look at earnings estimates, we can look at revenue estimates, but unless you actually have an inside look at the books and really see what management is actually forecasting internally, it's really hard to gauge what the companies are going to do in terms of revenues. And one thing I will point out, when you look at Research in Motion, this was a true surprise with their forecast. It wasn't that their numbers were so bad. It was really what their guidance was. And when some people look at it, and maybe they looked at last week's earnings preview where I said Research in Motion should beat on earnings, keep in mind anytime a company reports, there's always a possibility of a surprise. And a surprise does not necessarily mean a good or a bad thing. It means something unexpected occurred. In the case of BlackBerry, we had a case where as analysts were actually raising their earnings forecast, and there was an expectation that the company would not only top the numbers for the most recent quarter, but actually give good guidance. And what happened was the company actually gave guidance that was bad. So a true surprise, and you're seeing the correct reaction in the market, which is to punish the shares. Obviously painful if you're an investor who holds Research in Motion, but we have not seen a representative sample of companies coming out there. And even when you look at Research in Motion, a lot of their sales guidance was actually dependent on their product mix, not so much maybe a broader industry trends. So investors do need to keep that in mind. I know it's complicated, but it's not a simple black and white situation we're going into.
All right, and Charles talks about companies that could surprise to the upside in the text version of his piece. See that at Zacks.com. With Charles Rotblatt, I'm Terry Ruffalo.